also wanted to also looks for the stability in the performance of the company, because they expect standard services from the company. And the employers who are working with the organization also are in need of information of the company, how it is performing. So the process of financial accounting should be able to meet the requirements of both internal and external users, and with a major focus on the shareholders or the investors, because they are the main source of capital providers to the company. And now, from these discussions, from whatever we have discussed it so far, so let us understand what are various things that can be done in the area of accounting. As we have already discussed these points, this gives a summary of what covers under functions, what covers under scope and functioning of the functions of financial accounting. As we already discussed, under financial accounting, we can measure the business performance and business position of a company, and we can forecast the future prospects of a business in terms of its profitability and growth, and it can provide relevant information for different investors and different stakeholders for the decision making, and it enables comparison of business performance and business prospects. So what is the important thing, what is the main important function of the scope of financial accounting is the enabling of comparison and evaluation of the business performance and the prospects. Business performance and profit. All the companies prepare financial accounts. The investors are wanted to invest in different companies. So in that case, they should be able to compare the financial reports provided by different companies. So the process of financial accounting, will enable the process of financial accounting will enable comparison and evaluation of business performance and prospects of different companies. At the same time, based on the information generated by the financial accounting, also control business operations. We can understand how a business is performing. So we will identify areas where there is a concern, and then we can look at the areas where there is problems, so that we can take a decision as to how to overcome those problems or challenges. So in this case, the process of financial accounting will facilitate the strategic decision making process. That means we can take strategic decisions based on the financial accounting information, right? And then the another thing is that any regulatory requirements can also be fulfilled by the process of accounting information. So a company has to follow different regulatory requirements in terms of that were given by the government, and as well as other taxation requirements also. So all those things can be fulfilled with the help of the accounting area of financial accounting. Okay. Everybody is able to follow me? Okay. Up to now, is okay. Can we move to the next section? Share is not, screen is not sharing. One minute. Now the voice is clear. Voice is clear now. Are you able to see my screen now? We are not able to see the screen. Just 1 minute, I will share the screen. Can you see the screen now? Okay. Yes. So far, you are you what you told? Are you clear about what I have told so far? Up to this level, can we move to next point? Okay. You're all able to see the screen, right?
Yes, sir.
Yes, sir.
Okay. Please speak in the voice, please. Okay. Because here messages are not coming properly, little bit. So if you can speak with your voice, I can understand, right?
Okay, sir.
Okay. Okay. Are you able to see my screen now? Can you see my screen?
Yes, sir.
Okay.
Sir.
Yes, sir.
Yeah. Yeah.
Yes, sir.
Yeah. Right. Next. Branches. If you have any doubts, please tell. Okay. In between, if you are not able to follow or if you are having any problem, please let me know in the process. Right.
Okay, sir.
Right. Right. So let us go for branches of accounting. So initially, we all know about financial accounting. We already discussed that the object of financial accounting is the preparation of financial statements and the financial reports. But the area of accounting is not only confined to only financial accounting. It was expanded into other subfields also. So other fields are cost accounting. Cost accounting is about financial accounting gives a summary of all the business transactions in the form of profit and loss account and balance sheet. And we cannot understand what was happened with respect to background. We will only give a summary of information in the financial reports and the balance sheet of profit and loss account. But in order to understand a detailed picture of how different business transactions happen, we have to go for other type of accounting areas. So in that case, the first one is cost accounting. In the area of cost accounting, it is mainly related to the internal purposes. It is not to the external stakeholders. Cost accounting is applicable or used by the internal stakeholders of the company for the purpose of understanding a detailed idea about the company's activities. So cost accounting. Cost accounting deals with the valuation of business transactions and events on valuation of products and services. At what cost we can value a product, at what cost we can value a service, and what are various costs that can be incurred, how the profit can be generated. Cost accounting gives scope with respect to understanding the pricing of products and services and how to improve the profitability. This mainly focuses on the costing of different valuing of different business transactions and business events. And management accounting. Why management accounting? Management accounting is the activity that we take before a financial year commences or after a financial year commences or in the during the financial year. The area of management accounting mainly takes the information from financial reports and the cost reports and prepares management accounting and prepares management reports needed for the purpose of prepares management reports needed for the purpose of management decision making. So they will make reports as per the requirements of the management for the purpose of planning and executing their business strategies and designing their business strategies. Okay. So mainly financial accounting, cost accounting, and management accounting are the three areas that mainly focuses on the management perspective. And the other areas of accounting are social responsibility accounting and human resource accounting. Both these are in the emerging process. Both, both these are emerging processes. And one of the important feature of this social responsibility accounting and human resource accounting is what we can say that the financial accounting, cost accounting, and management accounting will mainly have a quantitative. That means we can measure in terms of money. But when it comes to social responsibility accounting or human resource accounting, these areas are not accurately we can measure in the form of money. So, but technically there is a need to record for these activities. Mainly, the social responsibility accounting deals with what kind of benefits the company is doing for the protection of environment, or what kind of impact it will be, social impact or economic impact a company is creating. So mostly it will be in the form of qualitative. Qualitative means there won't be any numerical values. They will give a description of what they have done for the country or what they have done for the protection of the environment. And similarly, when it comes to human resources also, human resources are who are working with the organization. Traditionally, that human resources are not considered as a asset or a liability for a company. They are considered as an expenditure for a company. But the human resources forms basis for any business organization or for any activity. So the companies are investing huge amounts in the process of developing human resources. So they wanted to know how these human resources are contributing to the performance of the company, or how they are able to contribute for the achieving the objectives of the company. So these both social responsibility accounting and human resource accounting are emerging topics, and now they are also becoming a part of area of accounting. Okay, and then let us come to the limitations of accounting. See, all the accounting principles, all the accounting concepts, the process of accounting is based on certain assumptions, concepts, and conventions which are developed, which are emerged. We can say emerged means they came with the experience. So these give scopes for subjectivity. Subjectivity means anybody can think anything in that viewpoint. So there is a scope when we are recording any financial transaction, or when we are preparing the financial reports. The interpretation of these accounting principles or concepts can be subjective. So you can consider one viewpoint, I can consider one viewpoint. So if we prepare financial statements or the financial report with that viewpoint, with that subjectivity, we can say that the information which is giving in the financial accounting may not be reliable. Reliable means may not be so useful. This is one limitation of the area of accounting. And another thing is that in the area of accounting, only which is measurable in terms of money is only considered. As we already discussed, that human resource accounting or the social responsibility accounting, so these are not strictly can be measured in the monetary forms. So such type of information cannot be accurately captured in the assessment of value of a company or business performance or business position of a company. And the other thing is that the financial records gives you what was actually happened, what was actually happened in a period of time. So they cannot give you the information about what is going to happen in the future. You can only understand what was happening in a particular period of time and what is the financial position of the company at a particular point of time. So we can only understand it to that particular point of time. So when you want to think about the future of a company, how it is going to do in the next year, the financial statements may not give you such a kind of picture. Okay, though there are efforts have been making by the standard setting bodies and accounting professional to overcome this challenge, still they are past oriented. They will only give you the past oriented information. And as we have already discussed that comparability of information is also essential. So because of this subjectivity, all the times the comparability may not be also possible for the shareholders or various stakeholders to assess the performance of a company with respect to the other company. Okay. So with this, we completed basics of accounting. You have any doubt? Please explain the trading and profit and loss account problem. Yeah. Please. Hello. Actually, Simran, we will discuss about profit and loss account problems later on. Actually, this section will focuses only on the theory part, and will come in the process. Okay, we will discuss. We'll
Okay,
discuss
sir.
about the profit. Okay. Any doubts, or you wanted to know anything?
Sir, in
Raghunath,
finance, they gave this problem, profit and loss account problem. We are not getting totally balance sheet. It's not getting
okay,
tally.
balance sheet is not tallied.
Yes, sir.
Okay, okay. We will discuss, Simran. We will discuss, right?
Yes, sir.
Okay. I will discuss about it. Any other doubts or any other thing you wanted me to tell in this case regarding accounting basics?
So could you please explain once again cost accounting?
Cost accounting, sir. Cost accounting, Harish.
Yes, sir.
Yeah, yeah. Are you able to see my slide? Are you able to see my slide?
Yes, sir. Yes, sir.
Okay. So this why we will use cost accounting is in the financial accounting we will only give the summary of transactions. See, we'll talk about sales, we'll talk about purchases, we'll talk about returns, and we'll talk about a consolidated figure of the items, expenses or revenues or incomes. So while using we when using the cost accounting, we can go into a micro level. So how the how the sales can be done? We have followed one. We priced a product at a particular value, but whether this value is profitable or not. So to determine that, we will follow the cost accounting concepts. Cost accounting basically discusses about how a product or services a company at what price a company can be priced, and what are the expenses that can be incurred in the process of manufacturing a product or designing a services will happen. Okay, you understand, Harish?
Yes, sir. Yes, sir.
Are you able to understand?
Yes, sir.
So we'll discuss more about cost accounting next sessions, Harish. So
Okay,
these
sir.
are all introductory classes. Just I'm introducing the concepts. I
Okay,
will
sir.
go through all the concepts in detail in the coming session.
Okay, sir. Thank you, sir.
Yeah. Uh, Anything more you wanted to know in this introductory part? You wanted to have any clarification regarding all these concepts? Okay, right? This first unit theoretically, are you clear about all the points? Any doubts? Can we move to next unit?
Yes, sir.
Yes. Okay. Second section, second unit, it talks about accounting principles and standards. Okay. What so far we discussed about broadly about what is accounting, what are different things that will be followed in accounting, what is the objectives of accounting, what is the scope of accounting, what is the limitations of accounting. Then what is the theoretical background of accounting? See, for any subject, we need to have an understanding about how to work with the subject. So the theory part of accounting lies with accounting principles and the standards. Accounting principles and standards form the basis of accounting area of accounting. So here we have to understand in a very broad way, because this accounting concepts and standards, understanding this accounting concepts and standards itself creates a bit of actually, what is a concept, because they'll speaks about different terminologies. Somebody says about accounting concept, somebody talks about accounting convention, somebody talks about accounting principles. So if you want to understand the area of accounting clearly, or if you want to understand the area of accounting fundamentally, so we need to have a clarity regarding what are accounting concepts, what are accounting conventions, right? So let us accounting principles. GAAP. So you all maybe heard about what GAAP. GAAP means generally accepted accounting principles. What are generally accepted accounting principles? See, as I had already told, the area of accounting is not like a science subject, or it's not like any art. So where we can follow a guideline given by one person and we can follow the same thing across all the areas. If one company is following one accounting principle, we cannot say that the same accounting principle or the same technique can be followed by the other company. But by the company. But in case of science or in case of any other subjects, we can say that if we are following any principle or if we are following any formula, that same formula can be applicable in different different areas and in different applications. But in the area of accounting, we cannot exactly say that when we are following one technique in one company recording a financial transaction, the same technique can be applicable for a other company. Why this happened is the the accounting concepts and conventions which we speak about in the area of accounting are basically derived based on the need and convenience of recording and reporting of the business transaction. The whole process of accounting was emerged for a period of long time and it was diversified. So all company business happens across the world, and their own set of for 1,000 years. The business activities are happening across different countries, own concepts and own conventions in terms of recording and reporting of the business transaction. So somebody says about, and when we talk, when somebody says about says accounting theory is based on some accounting conventions, then there will be a confusion. So what actually constitutes a concept, or what actually constitutes a convention? So what actually a accounting theory? So in order to avoid this ambiguity, or in order to avoid confusion in terms of understanding the accounting of accounting theory, all these concepts and conventions which were emerged based on the experience of different business people over a period of long time are as generated accounting principles. So whatever the accounting concepts and whatever the accounting conventions that you are following in the area of accounting, we can refer to them all as generally accepted accounting principles. Why? Because these are the principles that were accepted by all the people. They, based upon their experience in recording and reporting of the business transaction, they define certain concepts, they define certain conventions, which can be helpful for easy recording and reporting of the business transaction and helpful for the decision making purposes. This is the meaning of gap. So when we combine together the concepts and conventions, we can term it as generally accepted accounting principles, right? And the next thing. So as I already told, conventions were developed by the experience of the business people across the period across the world over a period of time. All those concepts and conventions. So somebody may say that some are concepts, and up to dual aspect they will call as concepts, and from conservatism, consistency and materiality they will call as conventions. So when we club them together, we can call them as gap. So this is what you have to understand about gap. Gap are the generally accepted accounting principles which are clubbed after which simply the accounting concepts and conventions put together. Okay. So what is a business entity concept? Earlier, in the olden days, when people are recording business transactions, they don't have they don't follow they can all the personal business this and out this problem, this concept has emerged, that is business entity concept. So to avoid mixing of the personal transaction with the business transaction, so they wanted to record the transactions of a business separately. So this is what they will call as business entity concept. So what are the transactions related to business are only recorded in the books of accounts. Other transactions which are not related to the business, they will not be recorded in the books of accounts. So this is about the business entity concept and the money measurement concept. So whatever the activity, whatever business transactions that were happening in the area of accounting, they should be measurable in the form of money. If any transaction is not measurable in the form of money, it cannot be recorded. This is what already we have discussed, that financial account can only record the monetary transaction and it will not record any non-monetary transactions. And the next thing is periodicity. See, we cannot simply record the transactions continuously. So maybe in the earlier days, people may be recording transactions continuously, and transactions may become bulk at one point of time. So when the transactions are bulk, analyzing and understanding them may be difficult. So they come out with a concept called periodicity concept. What is a periodicity concept? Periodicity concept is nothing. At one point of time, we have to close the books of account. It may be 1 month, or it may be 6 months, or it may be 1 year. So, for example, traditionally, the accounting records are prepared for a period of 1 year. So, this is what is periodicity concept and the accrual concept. This accrual concept again is a derivative of periodicity concept. In periodicity concept, we wanted to prepare books of accounts for a particular period. Here in this case, 1 year. Normally, this is the traditional approach that is following by the companies to prepare the books of accounts for a period of 1 year. For a period of 1 year. So, what this accrual concept says is that all the transactions that were, according to the periodic concept, all the transactions that are happened in a particular period should be considered. But in case times the money may not be moved, only transaction may happen. So sometimes with day-to-day activities also, let us say that I will give you money on that particular day. So the money won't be flowing in that particular point of time. For example, when you talk about in the area of accounting, the debtors. So we made a sale in a particular period, and the whoever purchased the debtor, the customers may not give you the money at a particular point. They may say that they will give some other time, but the transaction has happened, but the money has not received. But the accrual concept states that we can record that transaction. We can record the transaction because of accrual concept, right? This is the accrual concept. And then what is the matching concept? The performance of company, this is a derivative of both periodicity concept and accrual concept. Periodicity concept is, as I already told, that for every particular period of time we have to evaluate the performance, and the accrual concept says whether the money is moved or not in a particular transaction, we have to record the transaction. And then matching concept. So there are revenues and incomes that will generated in the process of account. There are revenues and income that are generated in the process of an accounting period. So to understand the performance, to understand the profit and loss that a company has generated in a particular period of time, we have to match the revenues and expenses only during a particular period, only which were happened in a particular accounting year. So that is called as matching concept. Okay. And going concern concept. Going concern concept is, I try to make a differentiation between accrual concept and going concern concept. See, accrual concept says that when a transaction happened, whether money is get or not, whether we get the money or not, we will record that. So in terms of going concern concept, if somebody have to give you a money, though there was no guarantee from the other party that he will give the money or not, in this case, there is no guarantee. But close particular time, because your business is going to take the time to account. So this is what a going concern concept states. And you are not able to get money from him. It cannot be said that you are not going to get a money, or you are not going to pay money for somebody else. So we can take the continuity of the transaction for the next accounting year. So this is what we call as going concern concept. And the cost concept. Cost concept states that whatever the business transactions or events happening, they should be taken at the face value, at whatever the value that was incurred at that particular point of time. So that will be the value or the cost of that particular transaction. Say, for example, you purchased goods for the purpose of sales. So at what price do you purchase the goods? So that price is called as the cost of the goods. So any transaction, whether you paid in salary, or whether you paid a telephone bill, or whether you paid any other expenditure, So that is all called as cost value. At what price you are paying, that only you have to take in the accounts. This is what we already told, that accounting communicates only past information. That is only happened information it will communicate. So this is what we call as cost concept and the realization concept. And let us have a look at with going concern concept and realization concept. When going concern concept, I told that if somebody is not responding whatever they wanted to give, that cannot be closed. And at the same time, it doesn't mean that everything can be included, right? It should have a prospect of realizing. So there is some chances. When we feel there is some chances, then only you can record it. That means there is a chance of realization. Then only the going concern concept will applicable. If it is not applicable, if there are no chances of realizing, if that person is died or if person is became bankrupt, and if he was unable to come out, then there is no point of recording such transaction. So when there is a definite point in realizing any amount, then only we can consider. So there is a realization aspect in that particular transaction. Dual aspect concept. As earlier I said that in the business entity concept, the reason for the emergence of business entity concept is that both personal transactions and business transactions have started to merge, and there is a concern what the actual performance of the company. It's just the business entity concept. But in the end, at the in only the business or recorded in the books of account. So the transactions are enormous. The transactions are more. So when we are recording in all, earlier used to be recorded only in a single way. So this created a lot of burden. So when you're recording transaction in one after the other in a logic, in a systematic, in a chronological order, without having any uh, process to classify them, then then there was a realization that a transaction can be viewed from two perspectives, so that the number of transactions that what we are recording can be recorded in two perspectives, so that we will understand that from where the money is coming and from where the money is going. So this is also called as double entry system. The double entry system of accounting emerged basically from this aspect only, that a accounting transaction has two perspectives, that is giving and receiving of money. So in all the transactions, whatever transactions we are taking and whatever transactions we are considering, it will have a double effect or dual effect, that is moving or taking of money. If that doesn't happen, that cannot be that transaction cannot be recorded. So there should be one giving aspect and there should be some taking aspect in a business transaction, right? And conservatism. So whenever we are recording a transaction, again, we cannot record blindly whatever we get and whatever gets to whatever the amount we will get. It's mostly basis on the assumptions and real based on the realization. So when we are expecting certain amount to be to come from a particular person or from a debtor, so certain times there may be uncertainty, as I already told, that may not be realizable. So, but there is a chance that we have to record such a type of transaction based on the going concern concept very conservatively. So, for example, one person is there, one debtor is there, he has to pay 1 lakh rupees. Sure that we can, as per the realization concept, we can say that he can pay certain amount, so that we can consider his transaction to be recorded, taking into consideration the going concern concept. But how much we have to record? Can we record 80,000? But as far as accounting is concerned, we should be conservative. Though we are sure that he will be paying out of 1 lakh, he will be paying 80,000. We cannot take that much full amount. Let us be conservative in your recording of the business transaction. Say, for example, you can write some 50,000 lakh. So this is what they will say. This conservatism can be followed in any transactions, right? Any transactions. Then consistency. So whatever the accounting concept or whatever the accounting principle that you're following in the area of accounting, it should be consistent. When we are following one basis for recording one particular transaction, we should follow the same thing for every year. There should not be change in the accounting policy or procedure that we are following in a particular year. So that we have to maintain consistency in recording the business transaction, so that there will be comparability year on year in the financial statements. And then the last concept is materiality. Materiality you have done a transaction. The transaction 100 rupees in terms of receiving or in terms of paying the money will make any effect in the on the profitability position of the company. So a small amount may not show much effect on the profitability position or the financial position of the company. But a major amount like 10,000, 20,000, 1 lakh, such type of valued transactions have the material aspect. That means they can have constructive value in determining the financial performance or financial position of the company. So you should be able to determine how far the business transaction can affect the business process. So by keeping, whenever you're recording, whenever you are identifying a business transaction, so you should keep all, whenever you are preparing the financial statements and whenever we are communicating the information, so all these points should be kept in your mind. These are the called as concepts and conventions. All the financial reports are prepared based upon these concepts and conventions. They are all interrelated, and but they form the basis for preparing the financial statements in a logical manner. Okay, you understand about concepts and conventions? Hello? You understand about this concepts and conventions?
Yes, sir.
Is it? Yes. Okay. Shall we move to next topic? Next slide. Yes.
Yes,
Just
sir.
let us have. Okay. Just let us have a differentiation between concept and a convention and a principle. See, a concept is an idea. So for every subject that we are dealing with, we'll have certain concepts. The concept is very specific to a subject. So to understand that subject, we should have the terminology in your mind. So these concepts are very basic to that area of study. Whatever the basic things that we are using in the area of accounting, that we called as concepts, which we have discussed now. That is periodicity concept or business entity concept or the money measurement concept, like that. And then conventions. Conventions means is like one acceptance. See, when you are working together, you need to follow certain understanding among yourself. So that convention may not be applicable to other people, but whoever working in a group may have certain agreement among themselves, so that they will have a clear understanding. So we have discussed conservatism, materiality, conventions. So these are formed an agreement because of an agreement among the business people. So those certain conventions are formed to bring a uniformity in their practices. Okay, and a principle. See, we have an idea about using the concepts and following some conventions. We will have an idea about what we have to follow in an accounting. So that principles, or that what we can say, that not principles, whatever we are doing, whatever steps we are taking to achieve your objectives, based upon your experience, we will frame a rule. We have to do things like this only. See, there are number of business transactions happens in a business, so we can formulate them using a concept, we can record them using the conventions. Then based upon your experience, we'll follow a process for identifying and recording of that particular transaction. So how we will follow the process is called as a principle related to that particular transaction. Okay, so the principles basically derives out of the reality, what is actually happening. And when you are following a principle, we can tell why you are following a principle, so that principle can be applicable consistently and useful and will helpful to understand what can be happen. This principle, these are in accounting. The principle is nothing but a rule that will follow in recording a business transaction based upon the concepts and conventions that we have studied earlier. So this is the basic difference between an accounting concept, an accounting convention, and the accounting principles. So the accounting concepts, conventions, and principles now can altogether put considered to be as generally accepted accounting principles. Okay. Next, let us go for the selection of accounting policies. Accounting principles, selection and features of accounting principles. Now that I think you are aware what is meant by an accounting principle, right? Accounting principles are basically rules that can be followed to record a specific business transaction based upon the concepts and conventions that are formed in the area of accounting. These accounting principles, which are applicable for over a period of time, can be called as accounting policies also. Okay. So whatever the accounting principles you are formulating, or however you are whatever the accounting principles you are applying, so these are all part of it, your GAAP principles. GAAP principles. So when you are formulating and applying an principle or accounting policy, so we should be able to take care about its impact on the performance and the financial position of the company. So when you are following a wrong principle, or when you are following a wrong policy, which will not fulfill the objectives of accounting. So what is the objectives of accounting? It should record transactions in a systematic way. It should communicate information to the shareholders. It should be able to provide comparability among business companies, and it should ensure the relevancy and reliability of the financial information. So when if accounting policy or accounting principle is not properly followed or properly designed, you cannot compare the financial statement. You cannot understand the performance. You cannot understand the financial position of the company. You cannot that information cannot be relevant. That information cannot be useful for you to make the decision making, right? So care should be taken while interpreting the accounting concepts and conventions. That is the limitations of accounting. There is a lot of subjectivity. You may think one point, I may think one point, other people may think about one point, and they can form the accounting principles whatever they feel is the correct. Keep this point in mind. Okay, so there is a subjectivity because these are all open principles. You can take anything, whatever you wish is correct, and it may be correct also, but the ultimate object is that you should be able to ensure the process should be systematic and it should be understandable and relevant for the decision making purposes. Okay, so what we say that when we are formulating the accounting policies or when we are designing the accounting principles, we can say that they should be prudent. That means they should be realistic, and they should be able to have a considerable. They should be able to have a substantial information. They should be able to give the material information for the stakeholders. Okay. One point you have to understand is that all the things are subjective. So there is a diversity. So whatever you think, I may think, other people may think other thing. But the objective of accounting is to give reliable and comparable and reliable information to the stakeholders, both internal and external, and mostly the shareholders. Overcome this diversity. How to overcome this diversity? Then comes the accounting standards, right? So this is where the accounting standards comes into the picture. So now there are accounting concepts, accounting conventions, and the principles are formulated in the area of accounting. There is a diversity. Then how to overcome this diversity? There are a number of transactions happening, and every person is following his own accounting policies, and there may be chances of non-comparability of financial information. So this is where the companies and the governments and the accounting trained professionals came up with the idea of developing the accounting standards. Okay, the objective of accounting standards is, and every country has its own accounting standard board, and accounting standards are formulated with respect to business transaction that can be common across all the business organizations. So say for example, plant and machinery is there. So based on the accounting concepts and conventions, we developed a principle. You are following one principle, I am following one principle. So there is a different perspective. To overcome this, one accounting standard on uh, plant machinery, plant property and machinery equipment has been introduced. So this diversity, to avoid this diversity, to avoid this subjectivity, this accounting standard gives you a guideline with respect to the recognition, measurement, and presentation and disclosure of information regarding the plant and machinery, or for any other business transaction or events, right? Okay, so this is the difference between accounting concepts and conventions, accounting principles, and accounting standards. Just keep this in your mind. So there is a lot of confusion that exists with this. People may be confused what is a concept, what is a convention, what is a principle, what is an accounting standard. Okay, so one point also you should understand here. Initially, we clubbed accounting concepts and conventions together and termed GAAP, and in that GAAP only specific accounting principles are entered. Again, then that is also termed as a GAAP, and now here comes the accounting standards. Accounting standards are very specific to particular country. So they are formulated within the country. So as per their legal requirements, as the political environment prevailing in the country, as per the needs and requirements of the country, that accounting standards will be formulated. So when we are considering accounting standards also, we can say that the gap will be little bit enlarged. We can say that they are, if we are considering Indian accounting standards, we can say that by considering all these things, Indian gaps will incorporate accounting concepts, conventions, principles that are developed based on the accounting standards, right? So generally accepted accounting principles are applicable to all the companies and across the world, and Indian GAAP is applicable along with these principles by considering the accounting standards formulated in the India, right? So with this, accounting standards ensures comparability of financial information. Okay. Still, there is challenge with accounting standards. They are trying to bring this uniformity, but then they were unable to bring this uniformity. Still, there is a diversity continuing the reporting of financial information. To overcome that, accounting standards, when you go through these accounting standards given by ICA, we can understand different disclosure guidelines given by the accounting standard boards to overcome this subjectivity or subjectivity in the process of accounting. Okay. Now you understand what is meant by accounting policies, principles, and standards. Are you clear with this? Hello? Hello?
Yes,
Yes,
sir.
sir.
Yes, sir.
Is there any confusion or are you clear now? You understand what is meant by accounting standards right now?
Yes, sir.
Yeah, okay. We'll move to the next topic, okay? So the formulation of accounting standards, let us have an understanding how the accounting standards are formulated. Accounting standards are the basis. Okay, this accounting standards takes into
Could you please
consideration.
change the slide, sir?
Slide? What happened? Not coming?
Yes.
Are you able to see now?
Yeah.
Now you. Hello.
ఇప్పుడు చేంజ్ అవుతుంది సార్.
అవుతుందండి. ఓకే ఓకే రైట్. ఎవరో మైక్ కొద్దిగా ఆఫ్ చేస్తారండి, కొద్దిగా డిస్టర్బెన్స్ వస్తుంది మధ్యలో. రైట్. ఓకే. Okay, let us understand about the formulation of accounting standards and accounting standards board. So in India, accounting standards are formulated by Accounting Standard Board of ICAI. And as I already told that each country has its own accounting standard board. It may function independently or it may function in association with a different industry association and professional accounting institution. So they cannot function, they may function individually or they may function in association with any industry association or preferred accounting institution, so that they will understand what they have and accordingly they will formulate the accounting standards. In India, that ASB is constituted by ICAI in the year 1977. This is an independent standard setting body of ICAI. This will follow the due process and procedures in formulating the accounting standards through a consultative and transparent process. Consultative and transparent process means that it cannot take a decision on its own. It will take different viewpoints and they will make it more transparent. So they will keep it openly, and then they will formulate the accounting standards. But then there is a conflicting point that though it is formed by the ICAI, so it cannot pronounce the accounting standards on its own. Just one. Oh, sorry. Sorry. Formulate the accounting standards on its own. You cannot say that I developed this account, you follow this standard. So for the ICA for its final approval, and two, it has to be processed to the Ministry of Corporate Affairs for the official announcement. So it cannot take an independent decision. So different industry, academic, and government departments, regulators, all are a part of this standard setting process. Industry associations include ASSOCHAM, CAI, FICCI, RBI, SEBI, and Ministry of Corporate Affairs. So through this process, Accounting Standard Board will formulate the accounting standards. This is the process of preparing an accounting standard in India. First, they will identify the area where, and as already told, there are different business transactions where there is a subjectivity involved in recording the business transactions. So first they have to identify the area, and they will formulate a group after identifying the area. That group will discuss and formulate the accounting standards. They will prepare the circulated among all the people in the that who are all members in the standard setting process. As I already told, that industry bodies, statutory bodies, government representatives, all will be a part of that standard setting process. So they will give their viewpoints, and that can incorporate based on the viewpoints given by them. All the points can be incorporated, and then a finalized exposure draft will be prepared. And once this draft is prepared, it was sent from accounting standard boards to accounting standard board to ICAI, and ICAI will take into consideration and will suggest for any modification that needs to be done to the ASB. So after reaching to an understanding between themselves, they will go for the issuing of accounting standard for the uses of companies. So this is the process of accounting standard setting in India. First we have to identify the area, constitute a study group, then they will prepare a draft and they will circulate among the members. They will give the viewpoints, and a draft will be prepared. Once the draft is prepared, the ICAI will give its own comments, and based upon the mutual consent between ASB and and the ICAI, final exposure draft will be prepared and the accounting standards will be issued. Okay, this is the process of standard setting in India. These are see, though we are following a systematic process, there are always problems in the process of standard setting. So some of the problems in the standard setting process, all financial transactions are not easy to understand. Very difficulty in understanding the financial transaction. That is one challenge where they have to formulate the accounting. They have to take the viewpoints of different people. I think convincing all the people may not be possible all the times, and a rapidly changing business environment. So we have to take into the consideration the area in which the company is operating. There are various factors that will affect: economic factors, legal factors, technological factors. As a result of which, the structure of transactions will vary. So if you are formulating an accounting standard related to one particular business transaction, that is not your point of time. So this also creates a problem. In some cases, political influence will be there. They may influence that not to introduce a particular rule or guideline in the accounting standards. Resource constraints. Sometimes there may be a financial constraint, there may be technological constraints. Mainly in the standard setting process, we should have skilled workers, knowledgeable skilled workers. It may not be possible all the time. So there is resource constraint in terms of human resources, financial, technical, and other things, and regulatory environment. So various acts and various regulatory norms are there. So all these things should be considered while formulating an accounting standard. You cannot tell you follow these guidelines blindly without taking the regulatory factors into consideration. So all these things will be affecting the process of standard setting that we have discussed earlier in the previous slide. Okay. Then, and these are all different standard setting bodies across different countries. In USA, accounting standards are prescribed by the Financial Accounting Standards Board. In UK, it is the responsibility of International Standard Board, and International Accounting Standard Board accounting standards can also be applicable across the world. If somebody wants to take them, they can follow those accounting standards instead of following their own accounting standards. And India also follows IFRS standards only. In India, accounting standards are formulated by Accounting Standards Board. It is regulated by Standard Board of Japan. These are all different standard setting bodies in different countries. I just gave 5 examples as an example. I gave 5 countries. Standard setting body. But nowadays, the International Accounting Standard Body is acting as a global standard setting body. So it is trying to bring uniformity across all the countries. In India, accounting standard boards try to bring uniformity with the companies operating in the country within India. That will happen with all the accounting standard board. In the area of globalization, we have to take into consideration the global factors also. So now, not operating in one particular country, when we have to compare the financial statements, so there should be uniformity in all accounting standards applicable across the world. So this International Accounting Standard Board, which is in the country UK, it is working towards bringing uniformity across all the accounting standards applicable in the world. So these are different accounting standard setting bodies. You can also refer to other. Also, what are the accounting standard bodies that are available following in different countries. Okay. So here I gave some accounting standards given by ICAI. These are only for the purpose as an environment. As I already discussed, I told in the previous slide, it's specific respect to disclosure of accounting policies, valuation of inventories, cash flow statements, contingencies and events occurring after the balance sheet date, net profit or loss for the prior period items. So these accounting standards gives guidelines with respect to these areas in the financial reporting. And another set of accounting standards are formulated based on IFRS standards. As I already told, bring uniformity in the when a company wants to work at the global level, they can go for these accounting standards, which are developed based on IFRS, International Accounting Standard Board. They specified accounting standards, and ICAI considered some changes in the existing accounting standards, and they developed Indian accounting standards that is applicable for those companies which wanted to operate at the global level, not specifically confined to the India. So these are the standards that are universally that give you scope to operate at the global level. You can prepare financial statement that is relevant to the global stakeholders. These are some of the accounting standards. There are around 30 to 35 accounting standards are there, both in the first category and in the second category. So you can refer if you want, just for if you want to have an information. Okay. And And the business environment is changing rapidly, and they need to bring these standards and quickly into the implementation. But that is not happening because that there are some reasons why it is not happening at a rapid speed as it was expected. Because what happened is ICA is not considering itself as a itself to promote the accounting standards. It's mainly focusing on training and development of auditors. So though it has the responsibility of accounting standards, it is not taking up it with as much speed as it was expected. So that is one thing. It is indifferent attitude. That means they are showing one perspective towards one activity and lower perspective towards other activity. And though they are saying that they are following transparency, it is not like that. It has been understand. So they need to be more transparent. They need to give importance to all the stakeholders in the standard setting process. So as a result, it was not happening quickly. The other thing, accountants and auditors itself are not interested to bring changes in the accounting process. They will do as they wish. That is what we have discussed earlier. That is what the subjectivity. So to overcome this subjectivity, accounting standards came into being, but then the accountants and auditors are not showing interest to bring those changes. That is also considered to be one reason for which the progress of developing accounting standards is slow. Always, in some cases, in some countries, the government may not take part in the accounting standard setting process, but nowadays, government also taking because of more financial resources have been using by the companies at the level. So they are also entering into the area of standard setting process, and they're also affecting the area of financial reporting. And hence, in this case also, the financial accounting standards are not developing as much as it was expected. And accounting research is that we have to see what is actually happening. So we have to understand the practical implication. The accounting research will give that perspective, but uh, is not research into the development of accounting standards is not as expected. So there are some suggestions that we can consider that it can be suggested that ICA can give more preference because it is not focusing as much on the standard setting process, and then ASB can rely more on accounting research because it will give more practical perspective in the development of accounting standards and relationship among different stakeholders. As we already know that there was not a proper consensus among all the stakeholders. So therefore, there was a need to come up with consensus among all the stakeholders, and then we have to ensure legal compliance. So we should make it mandatory the implementation of accounting standards, and then accounting standard board should be given more autonomy. Now it is functioning under the guidance of Chartered Accountant Institute for Chartered Accountants of India. So it was not able to take decisions as effectively as it has to take. So it can be given more power and independence to deal with the formulation of accounting standards. These are the basic suggestions that are given for the strengthening the performance of accounting standards. Are you clear with this accounting standards? Why accounting standards are followed? Okay. Can we go to next topic? Have any doubts? Any doubts? Can we move to next topic?
Yes, sir.
Yes, sir.
Yeah. Okay. Okay. Then this is also basic management accounting basis. In this about management accounting basis very briefly. Okay. So we discussed in the initial level that accounting area of accounting is in the emerging stage and different branches are being emerging, and accounting is first of all goes to financial accounting, then comes to cost tax accounting, human resource accounting, and other So what is the purpose of management accounting? So management accounting is a customized area of accounting that meets the requirements of internal requirements of the information from different sources, from the area of financial accounting, from the area of cost accounting, from taxation, from human resource point of view, and they will prepare customized reports for the management, for planning, organizing, and controlling, and for decision making purposes. So accordingly, we can see the definition given by the Chartered Institute of Management Accountants, London. Management
Your voice is not coming, sir. Sir, no voice. Sir, no voice, sir.
Are you able to hear me now?
Yes, sir. Yes, sir. Can hear now.
So now it is okay.
Oh, okay. And these are the functions. So in the area of management accounting and cost accounting, and we can convert them into a meaningful data that is essential for decision making purposes. So the area of management accounting also focuses on communication plans towards the level of the management and towards the lower level of the management strategies of the company to all the stakeholders and to achieve the goals and objectives of the company. So in the area of management accounting, it is not only restricted to communicating the quantitative data. It can also be considered from the qualitative data also. Some data, as we already told, that social responsibility accounting, so which we are doing for the benefit of the society. So such type of information sometimes always may not be communicated quantitatively, but management accounting can take the perspective also while formulating the reports and
So
formulating
screen
the
is not
strategies.
visible.
Now it is visible. Are you see now? Can you see the screen now?
No,
Screen.
no, sir.
No. Now it is okay.
Yes, sir. Now it is visible.
Can you see? Okay.
Okay.
And the scope on what is the scope of management accounting? The scope of management accounting mainly it's also comes out from the functions, so that it mainly bases on the financial accounting data. It uses the financial accounting data. Prepare the management mathematical and statistical tools are used, and the cost accounting data is used to analyze the information and to communicate the information to the management. It helps in the development of budgets The budgets means budgets, where we have to invest, where we have to withdraw them, how we have some plans and strategies. All these things can be helped. It is unlike financial reporting, which we have to put period of time. Management accounting reports need not be time based. They can be prepared at any time. They can be prepared monthly. They can be daily. They can be quarterly. They can be half yearly, as per the needs and requirement of the management. Okay. And management accounting facilitates internal auditing process also. So it is always essential to undertake internal auditing process. Internal auditing can also be facilitated with the help of management. It provides information that is essential at different levels of a business organization. The management accounting provides reasons for various business transaction, valuing business transaction, valuing different events, and why a business transaction has been happened, why a business event has been emerged. It gives a cause and the reasons behind for the happening of such business transactions and events. Provides different alternative solutions and strategies for various types of challenges. So in the process of analyzing the business performance, we will identify different challenges. For those all those challenges, different solutions and strategies will be provided under management accounting. So it will be mostly a flexible process. It may not visit format or procedures. It will be more flexible and customized to meet the information requirements. It will help basically in the future-oriented decision-making process. Financial accounting gives only what was happened. In the case of management accounting, based on the data that we can generate in the financial accounting and cost accounting, we can also make projections about future by using various statistical tools and mathematical tools. That projections can be possible in the area of management accounting. Helps in identifying the weak and strong areas in the business management process. So where a business is strong, where a business is weak can be identified with the process of management accounting. The big differences between management accounting and financial accounting. Financial accounting meets the requirements of external stakeholders. Management accounting meets the information requirements of internal stakeholders. Financial accounting is based on historical data. Management accounting is based on future-oriented data. Financial accounting mostly focuses on financial performance and financial position of the company. Management accounting helps in the assessment of future performance and prospects of a business unit or a business department. Financial accounting is a regulatory compulsion. We have to follow as per the regulatory requirement because we have to prepare financial reports as per the company law. And the management accounting can be at the discretion of the management and as per their requirement. It need not be necessarily, it is not a regulatory compliance. And financial accounting has to be prepared periodically, but management and requirements of the management. Cost accounting, as I already told, that cost accounting is very is about analyzing components of a business transaction. When we gave a consolidated view of individual transaction, we have to analyze, we have to value it is the product or cost of the product. Whereas in management accounting, based on the cost accounting data, we can think about whether we have to launch a particular product or service based on the cost data. And it deals specifically, cost accounting specifically deals with cost ascertainment. Cost ascertainment means at what value we have to price a cost product or service, and at how we can allocate a cost or a price to different products or different services across different departments. And it covers it takes into account all the areas of financial accounting, cost accounting, and taxation and economic perspective into the report preparation. Cost account considers only quantitative data, and management accounting takes into consideration both qualitative and quantitative data. Cost accounting is a regulatory requirement for the manufacturing concerns, but management accounting, as already told, that it is not a regulatory compliance, it is a need-based requirement. And to install a management accounting system, it should be strongly supported by teamwork. There should be clearly policy of management accounting system. It should not be ambiguous. All the people not a one-man job. They should have a clear rules and regulations that need to be followed in the implementation of that accounting system. And this management accounting should be integrated with all the fundamental financial accounting systems, which will generate information for the purpose of management accounting. And there should be a feedback mechanism in the system so that the information can be received from various stakeholders and it can be incorporated in the preparation of forward-looking statements. So on a whole, we can think that it's a teamwork with a standardized policies and objectives, and it should be integrated with all the departments in the organization and should be able to take the feedback and should be able to generate the information required to all the stakeholders. And this finally limitations of management accounting. Management accounting cannot take any information on its own. It is completely dependent upon mostly financial and cost accounting data. They form the basis for the development of management accounting. Management accounting reports. It is an expensive one. It is not an easy to develop an management accounting system. It requires a lot of human resources, a lot of infrastructure, technical both and financial resources. So it's an expensive thing. And we cannot take it as an alternative for the management decision making. It is only complementary for the management decision. It will only give an information to the management to take the decisions, but it cannot replace the management decision process altogether. And there was a need for the management to have the knowledge of mathematics, statistics, and economics in understanding the management accounting report. Sometimes there may be subjective assessment in the projections of the data in the management area of management accounting also. And it's always in the emerging stage, and there are always new tools and techniques that will come and becomes a part of management accounting for the development of management accounting report needed by the management. Okay. This is about the 3 units. All spoke about fundamentals of financial accounting and accounting standards and policies and management accounting. Okay. Everything is okay? Any doubts? Can we close the session now?
Yes, sir.
Okay, sir.
Okay.
Excuse me,
Okay.
sir.
Yes, please.
Sir, for the
So which area
assignment,
you?
only the last date
Yeah.
is 20 for both assignments.
June 20. But what they gave in the assignments?
June 20, they gave the date, sir. That's why. For the first assignment as well as second.
What is only profit and loss account and balance sheet? What is
What, sir?
In assignments, what is the topic that was given? Problem. Which problem?
That's now I will answer. In the assignment 1, they gave second one problem, sir. Just now I will
Which
say.
problem? Profit and loss account.
Profit and loss account. Wait, sir.
Oh. Your profit and loss account balance sheet is not tallying.
Yes, sir.
Right?
Yes, sir.
Okay. In next sessions, we will discuss about that.
Yes, sir. In the assignment 1
Take
paper,
that
they gave
assignment
that.
and then, if possible, you send it to me here. Close the session. Problem. So your profit and loss account balance sheet is not tallying.
Yes, sir.
Okay.
Where I should send, sir? To you in a Zoom or else on the WhatsApp?
You can send me in the WhatsApp. Right? You have my number?
No, sir.
Okay. Otherwise, I will collect from the different. Okay. If I'm unable to collect, I will take from you tomorrow. Okay.
Yes, sir. Kindly once give
Okay,
your
right,
number,
right.
sir, to me.
Okay.
Yes, sir. Your voice is not audible, sir.
Chat box I am putting. Okay.
Yes, sir. Thank you, sir.
Okay. Right.
Yes,
I'm
sir.
closing
Thank
the session, right? Thank you.